Crypto in 2025, is it still worth it? That's really the question we're digging into today.
Yeah, it's a big one. And, you hear such different things, don't you? Some people are basically saying crypto's over,
Right. Done. Finished.
while others are like adamant that it's only just getting started,
Yeah,
that the real potential is still unfolding.
absolutely. And it does feel different. I mean, thinking back to 2021 or even 2023, the whole vibe,
Yeah.
it shifted. We've got real regulation now, new tech coming online.
Uh-huh. And wider adoption, actual use cases emerging. It's not just hype anymore. It's fundamentally, well, a different beast.
So our mission today really is to break that down. We want to look at, Bitcoin and Ethereum, where they stand now.
And also dig into stablecoins, CBDCs, central bank digital currencies, because they're becoming huge.
Yeah, and AI. How's AI fitting into this whole picture?
Exactly. And bring it all together to help you figure out, okay, does crypto make sense as an investment now in 2025?
Okay, let's start with the state of play. Bitcoin's been, what, hovering around $70,000, give or take. What does that tell us?
Well, that figure, around $70, it suggests maybe a level of stability or at least a sustained interest that perhaps we didn't see quite as consistently in the earlier boom-bust cycles.
Less frantic, maybe.
Possibly. It could indicate a shift towards Bitcoin being viewed more like a somewhat established asset, maybe. And you've also got Ethereum 2.0 running on proof of stake now.
Right, the big upgrade.
And it seems to be, delivering better scalability, lower fees. That's significant progress on the tech side.
It just feels so different from, like, the mania of 2021. That felt purely speculative.
That contrast is really key, isn't it? The market has matured. I mean, considerably. There's way more focus now on what you can actually do with this stuff, the utility.
And the big money is here now, too.
Definitely. We're seeing serious involvement from major institutional players. That's a massive shift from just a few years ago.
Still, I know a lot of people listening are probably thinking about Terra Luno or FTX. Those collapses were brutal.
Oh, absolutely. And that caution is completely understandable. Those events, well, they shook a lot of people's confidence, especially retail investors, no doubt about it.
So that wariness is still lingering.
It is. But, connect that to the other side of the coin. You've got huge names like BlackRock, Fidelity, JP Morgan.
The traditional finance giants.
Exactly. And they're now offering crypto investment products. That says a lot, doesn't it? It tells you the market is evolving, that established finance sees, well, something more than just a fleeting trend. They seem to see long-term value.
Okay, let's pivot to regulation then, because that's a huge piece of this puzzle now. I can almost hear some listeners thinking, hold on, isn't crypto supposed to be free from all that?
Yeah, that's the classic tension, isn't it? The original sort of cypherpunk ideal versus the practicalities of, operating in the real world.
Decentralization versus structure.
Right. And while regulation might seem counter to that initial ethos, you could argue it provides the structure, the guardrails, needed for wider adoption. It builds trust.
Which is what those big players need, I guess. Pension funds, asset managers.
Precisely. And frankly, everyday people too. Clear rules make it less intimidating, less like the Wild West. It's crucial for bringing in cautious capital.
Can you give us some concrete examples? What kind of regulations are actually making a difference?
Sure. So in the U.S., for instance, we finally have much clearer tax rules for crypto. That removes a big headache and uncertainty for investors.
That's huge.
It really is. And then there's the approval and launch of Bitcoin and Ethereum ETFs, exchange-traded funds.
Right, making it easier for people to get exposure through regular brokerage accounts.
Exactly. It's a regulated, familiar investment vehicle. It opens the door for people who maybe weren't comfortable holding crypto directly, dealing with wallets and keys and all that.
So regulation, maybe it's not the enemy some thought it would be. Maybe it's actually like paving the way.
In many ways, yes. It seems to be acting more as a catalyst for growth, or at least for maturity, rather than just a roadblock. And look internationally, too.
Wow.
Places like Singapore, Switzerland, the UAE, they were quite proactive in setting up regulatory frameworks early on.
And that helped them.
It seems so. By embracing it, they've kind of become hubs for blockchain innovation, attracting talent and investment. Shows that regulation and innovation can coexist.
Okay, so regulation is building trust, laying groundwork. Now, let's zoom in on the technology itself. Are we still mainly talking about digital coins? Or is the blockchain tech underneath the real long-term story here?
That's a great question. I think many people involved in this space would argue pretty strongly that the underlying blockchain technology is the truly enduring transformative part.
The currencies are just one application.
Kind of, yeah. A very important invisible one, obviously. But the potential uses for a secure, transparent, decentralized ledger, they go way beyond just digital money.
Right. So, what are some of those real-world uses we're seeing now in 2025? Beyond just, trading Bitcoin or Ether.
Well, DeFi, decentralized finance has come a long way. We're seeing protocols that are much more stable, more reliable than the early experiments.
So things like lending, borrowing.
Exactly. Lending, borrowing, trading, earning yield, all done via code, transparently on the blockchain, without needing a traditional bank in the middle. It's maturing.
What else?
NFTs, non-fungible tokens. They got a lot of hype, maybe some bad press.
Yeah, the digital art thing.
Right. But beyond that, they're finding really practical uses. Think digital proof of ownership for real estate or managing digital identities securely, like a unique verifiable digital certificate.
Okay, that makes more sense, more tangible.
And there are even pilot projects looking at using blockchain for things like voting systems,
Yeah.
trying to increase transparency and security in elections.
Wow, okay, so it's really about building these secure, verifiable systems for all sorts of different processes. It's not just watching coin prices fluctuate.
Precisely. And that's where platforms like Ethereum or Solana or Polkadot come in. They've grown into these huge ecosystems supporting all these different decentralized applications or DApps.
So it's like the internet evolving beyond just email.
That's a really good analogy, actually. Yeah. Email was the first big application, but the underlying internet protocols enabled everything else we use today. Blockchain platforms are kind of aiming for that, enabling a new generation of applications.
And a big part of making that practical was solving the scaling issues, right? Those infamous gas fees on Ethereum used to be crazy expensive sometimes.
Oh, absolutely critical. That was a major bottleneck. But layer 2 scaling solutions, things like Arbitrum, Optimism, and others, have made a massive difference.
How do they work, basically?
In simple terms, they process transactions off the main blockchain, bundle them up, and then sell them back on the main chain more efficiently. It makes things much faster and way cheaper.
Which opens up new possibilities.
Totally. It makes things like microtransactions feasible,
Yeah.
which just weren't practical before when fees were high. It makes the whole system more usable for everyday things.
So the underlying tech, the infrastructure, it's getting stronger, more versatile. Okay, let's layer in stablecoins and CBDCs now. These feel like they're really changing the financial conversation.
They really are. Very transformative. You've got stable coins like USDC, USDT. They've become absolutely essential in the DeFi world.
Because they hold their value, right? Pegged to the dollar or whatever.
Exactly. They provide that crucial price stability that you just don't get with, say, Bitcoin or Ether most of the time. It makes them a much more reliable bridge between traditional money and the crypto ecosystem. Predictable.
And then on the flip side, governments are getting in the game with CBDCs, central bank digital currencies. That feels huge.
It is a massive development. By now, 2025, we're actually seeing several major government-backed digital currencies in circulation. The digital euro, the digital rupee, China's digital yuan has been around for a bit longer.
So this isn't just theoretical anymore.
Not at all. It signifies a really fundamental shift in how central banks are thinking about money itself. They're creating, essentially, a digital version of their own national currency, issued and backed by the central bank.
So how do these two things, stablecoins and CBDCs, fit together in the bigger picture? Are they competing? Complementary?
It's still playing out, but you can see distinct roles. Stablecoins are sort of the workhorses within the current crypto and DeFi space. They grease the wheels for trading, lending, cross-border payments, offering stability within that ecosystem.
The bridge.
The bridge, exactly. CBDCs are more about the evolution of the core monetary system itself, directly from the central bank. They could impact everything from how monetary policy works to how we all make payments at a national level. Different beasts, really, but both involve digital currency.
Fascinating. Okay, and then there's the other huge tech trend, AI, artificial intelligence. It seems like it's touching everything. How is it intersecting with crypto?
Yeah, the integration is happening fast, and it's pretty compelling. We're seeing AI used in some really sophisticated ways.
Like what?
Well, AI-powered trading bots, for starters. Algorithms that can analyze insane amounts of market data, identify patterns, and execute trades way faster than a human could.
Okay, trading. Makes sense.
But also security. AI is getting really good at detecting fraudulent transactions, spotting anomalies that might indicate a hack or a scam attempt.
Improving safety.
Potentially, yes. and also auditing smart contracts. AI tools can scan the code of these contracts to look for vulnerabilities or potential bugs before they get exploited and cause losses.
That seems really valuable given the stakes.
Definitely. And some projects are even using AI to build predictive models for DeFi, trying to forecast yields or risks, things like that. More efficient markets, maybe.
So it's not just crypto evolving on its own, it's connecting with these other massive tech waves, like AI.
Exactly. It's not happening in a vacuum. The crypto space is dynamically evolving, and it's intertwining with other major technological shifts. AI is a prime example of that synergy. Powerful stuff.
Okay, this sounds like a space with a lot of development, a lot of potential still. But, we have to be realistic. What are the risks? What are the red flags people still need to watch out for in 2025?
Absolutely crucial to keep that balanced perspective.
Yeah.
Because yes, while the market has matured, the risks haven't vanished. Not by a long shot.
So volatility is still a thing.
Oh yeah, maybe not always the wild 50% in a day swings of the past, but volatility is still baked into the crypto market. Prices can move significantly, quickly. You have to be prepared for that.
And hacks, scams.
Still happen. Security has improved. Protocols are generally better audited, but vulnerabilities can still be found and exploited. Hacks are still a risk. And unfortunately, scams are still out there too. Maybe more sophisticated sometimes, but they haven't gone away.
So it's not safe in the traditional sense?
Not like putting money in an insured bank account, no.
Right.
Which really highlights the need for investor education.
Mm-hmm.
Now, more than ever. Meaning, the days of just throwing money at a random coin because it's hyped on social media, those days should be over if you're being sensible. You need to actually understand what you're investing in. Do the research. Understand the tech, the team, the use case.
Less FOMO, more due diligence.
Exactly. Much more due diligence.
You mentioned earlier a potential risk from regulation itself, the risk of over-centralization. Can you unpack that a bit?
Yeah, it's an interesting, kind of ironic potential consequence. As regulation comes in and attracts the big institutions, the ones who can afford the compliance costs,
Right.
there's a risk that power and influence start to concentrate in the hands of those few large regulated players. Exchanges, custodians, fund managers.
Which kind of goes against the original idea.
Exactly. Some argue it could undermine that core decentralized ethos that was so central to crypto's beginnings. It's a potential trade-off that comes with mainstream acceptance and regulation. Something to watch.
And what about the tech itself? Are there still risks lurking in the code?
Definitely. Technological risk is always present. There could be undiscovered bugs in smart contracts, flaws in the underlying blockchain protocols, things that developers haven't found yet.
And those could lead to big losses.
Absolutely. We've seen it happen before where a flaw gets exploited and funds are drained. So again, it comes back to understanding the project, the quality of its code audits, the strength of its security practices. Due diligence on the tech side is critical.
Okay, so we've mapped out the landscape, the tech, the regulation, the risks. Let's get to the bottom line. The big question we started with. Should you still consider investing in crypto in 2025?
All right, the million-dollar question, or maybe the $70,000 question for Bitcoin.
Yeah.
Based on everything we're seeing, I'd say potentially yes, but.
A big but.
A very big but. It comes with major caveats. It needs to be approached strategically, with your eyes wide open, and with a clear understanding of what you're doing.
So it's not the Wild West anymore.
No, I wouldn't say that. It's matured. It's becoming more of a distinct asset class, maybe still alternative, but an asset class nonetheless. It requires a different mindset than just pure speculation in 2021.
So the get-rich-quick dream is probably less realistic.
Much less realistic, I'd say. Maybe think of it more like investing in early internet stocks back in the day.
How so?
Well, there was enormous long-term potential, obviously, but there was also huge risk. Lots of companies failed. Success meant picking the right projects, understanding the underlying technology, seeing the long-term vision. It wasn't a guaranteed path to riches overnight. It was a long game.
So applying that lens now, where do the big names, Bitcoin and Ethereum, fit? Are they the blue chips?
I think that's a fair assessment now, yeah. They've largely cemented their places as the blue chips of the crypto world. They have the longest history, the biggest networks, the most infrastructure built around them, the most institutional acceptance.
What about beyond those two?
Well, you're seeing continued relevance and growth from other Layer 1 platforms chains like Avalanche, Solana, others offering different trade-offs in terms of speed, cost, decentralization.
Competing ecosystems.
All right. And then there are newer projects, maybe more niche, some focusing on integrating AI deeply into the blockchain, for example. These might offer higher growth potential.
But also higher risk.
Also, definitely higher risk, generally speaking. Needs even more careful research.
And stablecoins. We talked about their role in DeFi. Are they an investment or just a tool?
Mostly a tool, but a useful one for investors too. Beyond just trading, they're key for things like yield farming, earning interest on your stablecoin holdings in DeFi protocols.
Okay.
And they're increasingly used for things like cross-border payments, sending money internationally quickly and cheaply with a stable value. That's real utility.
So if someone is considering dipping their toes in or maybe adding to an existing position in 2025, what are the key strategies they should be thinking about?
Okay, number one, diversification. Don't put all your eggs in one basket. Spread your investment across different types of crypto assets, maybe some Bitcoin, some Ether, maybe a promising layer one, perhaps some exposure to DeFi or AI-related projects, depending on your risk tolerance.
Makes sense. Don't bet the farm on one thing.
Exactly. Second, consider dollar cost averaging. Investing a fixed amount regularly, say, every month, regardless of the price. It smooths out the bumps from volatility. You buy more when prices are low, less when they're high.
Takes the emotion out of trying to time the market.
Precisely. Third, secure storage is non-negotiable, especially for larger amounts. Learn about hardware wallets, cold storage, keeping your assets offline, away from hackers. Don't just leave everything on an exchange.
Security first.
Always. And maybe the most important one, continuous learning. This space moves incredibly fast. New tech, new regulations, new risks emerge all the time. You have to stay informed, read, listen, learn.
So the absolute bottom line advice.
It really boils down to this. Don't invest in anything you don't understand. Seriously. Whether it's crypto, stocks, anything. If you can't explain how it works or why it has value, you probably shouldn't be putting your hard-earned money into it, especially in a space as complex and evolving as crypto.
Okay. So wrapping this all up then, crypto in 2025, still a viable investment.
I think the evidence points towards yes, it can be, but specifically for those who treat it as part of a long-term diversified investment strategy.
Not a lottery ticket.
Definitely not a lottery ticket. It requires staying informed, doing your homework, and avoiding those impulsive, hype-driven decisions. It's about participating thoughtfully in an evolving asset class, not just gambling.
And it does sound like the ecosystem itself is getting better tools, more robust tech, more transparency, even with the regulation adding a structure.
That's a good summary. The infrastructure is maturing. Maybe the days of, 1,000x returns overnight on some random coin are less likely.
Probably a good thing for stability.
Probably, yes. But what we're seeing is the steady, ongoing development of what could be a whole new financial infrastructure. And crypto assets, in various forms, seem likely to be a significant part of that future.
That really is a fascinating thought to end on. What role might this play in the future of finance, and what role might you, the listener, want to play in it? Lots to think about. Thanks for taking this deep dive with us.